In today's video, we're talking about a dividend stock that people seem to either love or they hate. If you love this dividend stock, it's because you recognize just how critical a role they play in developing energy that the world demands. And if you hate this dividend stock, it's probably because you don't like the idea of how much oil we use as a planet. In this video, I'm going to share with you everything you need to know about this next dividend aristocrat we're talking about. We're going to look at the business, how it operates. We're going to look at all of the important dividend metrics. We're going to discuss the ability to increase cash flow with this dividend stock. And at the end of the day, we're going to discuss, depending on the type of dividend investor you are, does this dividend aristocrat make sense for you to own today? All right, in this video, we are talking about ExxonMobil Corporation, ticker symbol XOM. They are in the energy sector of the economy, and they have been paying dividends and increasing their dividend every single year for 40 consecutive years. Let's learn a little bit more about the underlying business. When you think about ExxonMobil, you probably think about oil, and you would not be wrong to think that way. Technically though, they currently have 3 different business divisions. They have their low carbon solutions, their product solutions company, and their upstream company. Product solutions is actually a combination of 2 separate business segments that they consolidated together, which was downstream and chemicals. When you think about upstream, we need to think about exploration and development of oil. When we think about downstream, aka this product solutions company, think about the products they develop, such as engine oil or chemical performance products and next generation lubricants and plastics. But the business truly is focused on oil exploration. They do have US operations, which have been open since 1870 when John D. Rockefeller and his associates formed the Standard Oil Company, but the majority of oil exploration and development actually happens outside of the United States. We're in their 2021 annual report and specifically the annual 10K filed with the SEC, and we can see the breakdown in earnings or losses after income taxes. You can see the differentiation here between upstream in the United States and outside of the United States, and you can see how this makes up a large portion of their revenue. Remember that upstream is oil exploration and development, whereas downstream are some of the products they make as a result. And as you'll recognize here, when you think about ExxonMobil, you think oil, but actually they also do a lot of natural gas production as well. All right, let's talk about the important dividend metrics for ExxonMobil. Let's start with price here. ExxonMobil is currently priced at $113.37 per share as of November 15th. Current price is actually right around $109 per share. And since we're talking about price, let's look at the long-term price history for ExxonMobil. This is the 1-year chart. We can see that there's been a large increase in price. We were down around 60 right here, right around November of last year, and now we're up to 109, so almost doubling the price. Here's the 5-year chart. Back in November of 2017, we were right around $82 per share, and we're up to 109 now, though we did have some large decreases that occurred due to COVID. And if we look at our 10-year chart, we can see that we have a net increase as well here. 10 years ago today, we were right around $88 per share. We're at $113 today. One of the biggest things we talk about on this channel is dividend growth rates, because this is one of the big drivers of the dividend snowball, or the increase in the amount of cash we generate year over year with dividend stocks. But we'll notice that the dividend growth rates are actually not that great. The 1 year is 0.9%, the 3-year average growth rate is 1.8%, the 5-year dividend growth rate on average 3.1%, and the 10-year growth rate of 5.9%. We've seen a significant slowdown in dividend growth, and that should be a warning sign for long-term holding dividend investors. Current dividend yield, 3.21% based on this November 15th price, and that is significantly lower than the average 5-year dividend yield, which is 5.73%. What this means is not only is this dividend stock not on discount, it's actually selling at a 78% premium compared to its historical average yield. Now, 3.21% is not a bad dividend yield, but it is a lot lower than you've received historically from ExxonMobil. All right, let's talk dividend safety. Remember, when we talk about dividend safety on this channel, we talk about the payout ratio based on free cash flow. The 2021 payout ratio based on free cash flow is 67%, whereas based on the trailing 12 months, we're actually lower at only 26%. With ExxonMobil, and in reality, other types of energy companies, including water companies, utility companies, there's a lot of investment and maintenance costs that go into keeping the business running. We are here on the Morningstar website, and we're looking at the free cash flow per share over time. You'll notice back in 2012, we were at $4.73 a share. Then we dropped down to $2.83, $3.57, down to $0.98, down to $0.16, up to $3.6, $3.9, $1.9. Negative cash flow here during our COVID year, and then popping way back up here to 5.47. The reality is with this company, we have wide swings in free cash flow. But again, we focus on free cash flow as being the primary metric to see if a dividend is able to be paid. So we need to understand what happens when free cash flow is negative or lower than our dividend. We're here on the Morningstar website and we're looking at the actual financials data and the cash flow statement. You'll notice we've got 2019, 2020, 2021, and the trailing 12 months. And looking at free cash flow, we need to understand, first off, net operating activity cash flow. Let's scroll down here. Total net cash flow from operating activities right here. We can see 29 billion, 14 billion, 48 billion, and then to the trailing 12 months, $76 billion. But we have to subtract our purchases of property, plant, and equipment. We have 24 billion here, 17 billion here, 12 billion here, and then 16 billion over the trailing 12 months. This purchase of property, plant, and equipment, aka reinvesting back into the business, sometimes this eats into all of or most of our free cash flow right here. Whenever this happens, the business needs to make up that cash so that they can pay a dividend. Because you'll notice if we scroll down here, here are the cash dividends paid year over year, around $14 billion. But in some years, we don't have enough cash to pay the dividend. And you'll notice right here, whenever that happens, there are issuance of debt. The reality is, in some years, ExxonMobil has to invest more into the business than they have available. And when they do that, they have to issue debt. And it's reasonable to be alarmed by the fact that every once in a while, ExxonMobil has to issue debt in order to pay the dividend. But remember, we have to take in all of this information in context. ExxonMobil has been paying increasing dividends for 40 consecutive years, and they've got plenty of free cash flow right now. Therefore, that part does not concern me. Now, one of the best parts I love about ExxonMobil is the fact that they have great option premium. And this is the part that keeps me coming back to ExxonMobil because it's actually in my own portfolio right now. ExxonMobil has really great option premium. They offer options on a weekly basis that expire every Friday. And this just evidences just how much option premium is available. You'll notice that this is the at the money price, right around $109. If you wanted to, you could literally right now today sell an option that lasts for 4 days at the money and generate $200. Now, I wouldn't necessarily recommend doing that. I never really sell at the money options. I like to sell out of the money options to give myself both income right now as well as the ability to grow in the future. So let's go conservative here. Let's say we wanted to sell a 30-day option out of the money. We'll scroll down here to options expiring on, let's say December 30th, which is 32 days. Let's go with a 20 delta right around here. We'll go at $118 strike price, 32 days out. Okay, so that gives us 118 minus 109, that's 10% out of the money for a 32-day option. We can generate here approximately, we'll go with $119 or $119 a share. So we'll assume 1.19 per share, and let's say we can do that every 12 months. Again, I'll give you my normal disclaimer, which is we know we're making some grand assumptions here. We know that at times the stock price will fly way high and we'll get assigned and we'll have to buy back into the dividend stock. And there might be other times when the stock drops significantly and we're so far away from the strike price or our cost basis that we have the ability not to sell options. But we're making the assumption of $119 a share 30 days at a time. Take that number multiplied by 12 months, gives us annual cash flow of $14.28 per share. But we need to also add in our annual dividend to figure out the total cash flow that's available. ExxonMobil currently pays an annual dividend of $3.64 per share. So we'll add $3.64 to our cash flow here. Total cash flow per share, $17.92 per share. We take that number, we divide it by our current price, 109.81, which gives us an annual yield of 16.3%. And you can probably do better than this if you work with shorter time frame options such as 2 weeks out or 1 week out if you prefer. There is a lot of cash flow opportunities with ExxonMobil, but as you can see on this chart right here, sometimes the price swings wildly with ExxonMobil. You can see large increases or decreases. And this could result in you selling a covered call and then the price of ExxonMobil just zooms past your strike price and you miss out on gains. Okay, so let's answer that important question that you probably have, which is, does ExxonMobil make sense for me? Well, that depends on who me is, right? Because every dividend investor is a little bit different. If you like to sell options, specifically covered calls, then ExxonMobil makes a ton of sense because of how much option premium is available. If you value dividend growth though, and I do, this can be a concern for you because ExxonMobil has shown really low rates of dividend growth over the past 1 and 3 years. That doesn't even cover the long-term inflation rate of 2 to 3%, let alone the massive inflation we're experiencing right now. But then again, with the ability to sell covered calls, a lot of that is a moot point. And again, if you don't want to sell options, if you don't even want to touch them, then the value that you get with ExxonMobil is not quite as high. Because remember, at a 3.21% yield right now, you could actually go out and buy a really high quality, awesome dividend ETF, such as SCHD from Schwab, and you could actually capture a 3.159% dividend yield. And with that, you get 100 different dividend stocks in one awesome dividend ETF. And SCHD has a really great dividend growth rate, better than ExxonMobil. So if you're just going to hold the dividend stock and you're not going to sell options, then there's not a ton of value in holding ExxonMobil because you have the ability to get diversification, dividend growth, and at the exact same dividend yield by holding a dividend ETF such as SCHD. So do you own ExxonMobil in your own portfolio? And has this video been helpful in deciding whether or not you should buy it now? Make sure to leave your 2 cents down in the comments below. I respond to all comments I get on the day I post a video. Also make sure to let me know in the comments which Dividend Aristocrat or Dividend King I should look at next. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.